Hello everyone, thanks for coming back again to my YouTube channel. Um, I renamed my channel, so my channel name right now is Day Trader Ash. Um, and before it was Ninja Trading, so I like this one better, Day Trader Ash. So this is the one I'll be keeping it from now on. Today on 19 August, we had few stocks during the pre-market session. I'll be sharing with you my results. It's a red day for me, but for me, red days are the time when the learnings happen. So I look forward to red days because I know that I will learn a lot more from red days, so that in future I might have green days. So and then um, that's where we get all the learnings. So I'm very looking forward to the red days, not because I want to read it, but because I know that there will be a learning lesson on that day. So we'll talk about what we can learn from today red day recap. So on this today right now the time, as you can see, 7:09:37 a.m. I'm playing this video. So if anyone knows, this is classic cup and handle pattern. So we see the high again, it goes down and then handle. So it's cup and handle pattern. If someone doesn't know, I'll just give them you know a slight explanation on that. So basically this is your cup, right? And this is your handle. So and we take as it breaks this resistance level, this horizontal line. But where I generally take my trade is I want this to actually break this and then retest it here, and then I take it. So I take on the retest, and you won't see that retest on a candle. Generally, you will see it on a level 2. So currently it broke the level, as you can see here. It broke the level, and then it was retesting this previous highs, this high, and as it was retesting the high, I took my entry. So 12 12 12 is my stop, and then I don't see this pull away immediately, so I thought that the momentum is not there anymore, and I got out of my position, and I was right, because as you can see here the price come down to 1183. So it's okay to book small loss when it comes. You do not need to be a rigid person in that way, because that will stop you from having any unnecessary losses, big losses, I mean. So and then that should be it, and then I make one more attempt again here, um, as I finally see this cup and handle. I saw some strength, and the moment I took entry again, it again slows down. So basically there was not enough strength for the stock to push higher, and then we see the false breakdown. It's a bull flag as well. As you can see, this is a pole, this is a flag, so it's a bull flag pattern. So and then it comes down. So two trades, and then I missed recording one of my trades here. So basically what happened, that I made money on VRAX, $20, and I lost $30. So I'm red roughly $9 or $10 on the day. So and then this is my final trade, SKK, and I'll tell you why. But I think by this time I realized that I'm emotionally compromised, and I said to myself that I think that I'm emotionally compromised. But I thought that even though I'm compromised, I won't be taking any silly trades, um, because I know because on I take executions based on the rational of the trade logic, rather than on being emotions. And I see that sometimes what emotion does, it blinds your judgment, or it clouds your rational mind, so that even though you're thinking, you're trying, like for me, I was trying to make a rational decision, but I missed key information. And what I learned is to revise your strategy, to revise your rules, to revise your strategy criteria every day so that you won't forget any single thing. It's like you wanted to make a left, but you did not check. You give the indicator, so you follow some part of the strategy, but you did not check the side mirror. That caused this accident here because I did not check the side mirror. I just gave my indicator and thought that that should be it. So again, we should not forget, like in driving, we have to make a decision based on information coming from the mirrors, coming from from our eyes, all that. So as you can see here, the reason why I'm saying so is, for me it's a rule that if I see a huge volume red bar candle, I won't take any trade after that unless I see a green volume bar candle that is higher than the red one. So that's my strategy for the momentum trading. For hyperscalping, for making so here I took my entry right here. Volume is all dead, there is no volume I see, and immediately I'm like $21 right on the stock. I can replay this again. So what I was thinking here is, I was thinking that if it breaks VWAP 591 and the next high, we have a window. I was taking this as a window, so I was thinking that we might see the volume and then this price goes up and up and up, because this stock had the news. This stock was meeting all my 5 pillars of stock selection criteria, because if you can see here, um, uh, it has a float of lower float as well, maybe 2.5 million or something. So float was also less. News was there, and then I did not see any daily resistance on the chart either. Um, so for me it was a quality stock, but I forget to tell myself I need to let the stock become a quality stock, because currently it's 40% and then we have so many huge moves. Our fifth rank holder YJ is at 94%. Our sixth rank holder is at 71%. So I should be weighted, and I took entry for a stock that is at 40%. So you know when a lot of attention is on these stocks, MRT, NON, YJ, and the other stocks, so this may not be our most obvious stock on this day, and that's the reason that even though it meets all the criteria, we still um, did not see any volume here on this stock. So that's the reason. And for me, I should have waited till 744, and I should have gotten in at the entry or the retest of 744, because by that time it will be like 100 120% on the day, and the ranking will be first three, somewhere in between, and then it would be a better place to take a trade. So I took my trade here, and then, and one last thing, I did not have any hotkey where I can put a 10-cent stop. So as you can see here, my plan was, let's basically, if I take entry at 640, then 620 should be my stop. It should be my stop right here. It should be my stop right here. It's okay if it is going up. I'm okay to give $11. So I didn't. I just waited a little while, and then when it flushed down to six, so I took a 40-cent loss on a 50 shares. So that's almost 5 times 4 is $20. So I lost $20 on the day. Now, if you ask me why that happened, is because generally I found so lessons. So let's talk about lesson. First is, if my entry is at 640, my stop should be at 10 or 15 or at max 20 cents below. I cannot have a stop that is 50 cent, 40 cent below. Or if I'm thinking of taking stop at 40 cent below, then I should be aware that what is 50 shares loss on a 40 cent is how much in dollar. I did not calculate that. So if 40 cents on 50 shares is $20. I should have asked myself, am I okay losing $20 in this trade? If the answer is no, then I should have taken a much tighter stop instead of waiting for the price to fall back down to $6. Or I just should have only taken a $10 risk, which is 20 cents. So that's our lesson here. So my plan in the future, which I'm also trying, still trying, is to have a hotkey where when I make the buy, when I press the buy button, it automatically adds a 10-cent stop below my average cost, below my entry. So I do not know how to do that yet, but once I know it, then I'll be doing it for sure. Second is I need to remind myself to do revisions of my strategy. I, for some time, was neglecting that part, and today we see that happening in the real time where I forgot the key criteria of getting in, which is not to get in unless I see a huge volume green bar here, and only after that volume green bar candle I'll be eligible to take a trade. So it's a very clear cut criteria for me. So currently it was a red light. I thought uh, I, I got greedy basically to say that I wanted to make money in the market, and then I took more risk than and I thought that if I'm going with 50 shares, what's the worst it can happen, because my full position is 200 shares. Taking less number of shares does not define that you go away, step outside your strategy. Taking less shares is for you to manage your risk, um, and to maximize your profit as you can scale into the position. But it does not mean to step outside your strategy. So I should have remind myself that even though it's, or something should have been done here. So I'm still working on it, but I'll take a day or two, think about it. And also why I'm saying so is because if you check my this month, so I'm currently sitting at $227, roughly 2:1 profit to loss ratio. I'm right now seeing this first drawdown, and then I call it as a drawdown for me because as you can see today, August, it's a $28 loss. Um, and then so basically at this point I was sitting at the peak of my equity curve, right? And from here I came down to $30. So I gave roughly $28 in commission. It's 31 or a little bit more. And now what I want is basically um, to recover this money. So how I can recover $30? So that's the question. And what's my plan for next trading day? So basically, what I'm thinking is, if you can see here, my full position is 200 shares, and then I lost $30, right? So I lost $30 as you can see here total. So 50 shares is 1/4 of my position. So one plan is if I one thing for sure, I'm not going to trade with my full position size unless I'm out of this drawdown. Why I'm saying so? Because this was the time where I learned this skill, of speeding up and slowing down, is in this month. So in this month, this week, I was trading with the highest size, and I made really good money, roughly $200 from the market. But the more with speed I made the money, with this even faster speed I lost that money, because my size, I did not slow down after this loss, after these losses, right? So and because of those lessons, I have learned now is to is the habit of slowing down. So for me, what it means is, um, you know, so let's take an example here. So my equity curve is like this, right? And we see this dip, right? I want to reduce the damage further. So what I can do, if I keep the same size and if I come tomorrow with 100 or 200 shares, I go further down and I go further down and I go further down. This is something I do not want, you know. So what I do to make things better for myself? Um, I want to reduce the damage. I'm assuming that tomorrow is also going to be a red day. Based on I'm emotionally compromised, I hit my max loss today. So if tomorrow is a red day for me, um, what I can do to make it less damage to my account? So the answer is to go with 1/4 of my position. So if my full position is 200 shares, I will be taking 50 shares. So so basically I'll be here, right? And I'm making this small down because on 50 shares, I'll be losing less amount of money. And after two red days back to back, I generally give myself what I say is a gap. So I give myself what I call as gap. So I give myself a gap in my trading journey. So gap, make this bigger. Gap, gap of 1 day. These are all my brakes. I'm putting brakes on my speed. I'm putting brakes on my speed because I see there are speed bumps. The road ahead is not looking good. It's looking bad. There are many pits on the road. So I should have to slow down to reduce my damage on my car. Now, what I am thinking is basically with 50 shares. So I have $30, right? So let's say I have like, let me, $30, right? Loss. So what I can do is 30. So what I can do is with 50 shares, 1/4 position, I cover maybe $20. So my goal is to recover basically $20. And once I do that, then I can increase my size to uh, 1/2 of my full position. And so basically, I'm thinking of coming back here with 50 shares. It will take me more time, right? So it will take me 1 day, 2 days, or maybe this whole week. I don't know. And then I want to go with 1/2 of my share position as I'm reaching to the top. So now, as I with 100 shares, now let's say if I come out of this drawdown and I'm sitting somewhere here, right, with 100 shares. With 100 shares, if I'm sitting here, it will give me the cushion um, from the previous high. Now here, as I'm sitting here, and let's say if I have a question on the day, right? So this is the question for me on this day. I use that question to go with my full share size, let's say 200 shares. And assuming that if that trade turns out to be green, it will take my equity curve right here. So so the goal is to slowing down on the dips and to speed up on the acceleration uh, as the equity curves goes up. So basically to speed up that time. So you're saying that yes, one day max loss hit is a drawdown for me. Yeah. Some people wait for a week of the whole week going red, then they giving back the whole month earnings before they think of mm, taking action that they need to slow down because they are in drawdown. I learned this in June already. So it's okay for me to go as low as I can. I can wait for 2 more days, 3 more days. I am just giving back. I made a mistake, and it's a punishment to myself because that was not a new mistake. That was an old mistake, something that I already fixed. That to buy on a to wait for patiently waiting is the not to take a trade in the shadow. So I took a trade in the shadow of a huge topping tail. You have seen that huge topping tail, right? So I took a trade here on a huge red volume bar on a huge topping tail. So that's in the shadow of the this candle. I should have avoided this risk as a beginner trader. That is what I'm saying. And I'm paying the price by slowing down because I'm not paying the price actually. What I'm saying is it real if I'm slowing down is really the good thing for me because if I don't slow down then I will be paying the price because then I can go from here to maybe here and then I just whatever I made in this area all of that is gone. So I'm protecting my profits. I'm protecting my days. So um as you can see in this so today's red. Initially, I should have set a profit target. So from this day onwards, my profit target on the day is $40. After I make $40, my goal then switches from maximizing profit to protecting capital and then still trading. So today I reached half of my profit target. So I reached at my highs at $22. So I was still taking trade a little bit more. So that's the whole thing, right? So if I talk about this month, I had two red days in this week, and I have two red days in this week. But one of because of this day is a huge winner, we still are in a good position. So it's 47%. My accuracy, I can say, is low. My profit to loss ratio is good thanks to the market is giving us opportunity. I should work better. If my accuracy low, what I can do? So let's check the accuracy for this week. So how I can check it? So I go from 17 to today's let's say. So what's the accuracy? So my accuracy is 50%. What's my accuracy last week? So actually there's a better way of seeing things here. So I choose this month. Okay. So this is good. This week I can say is good because my accuracy is 67%. This is bad, right? This is definitely bad. 37% accuracy. I mean, I am over trading. So 15 trades, 10 trades. So I might have over traded here. or maybe here or here. So 2 days are fine, right? But I might have overtraded here or here. So what's the goal for tomorrow? So let's say if I'm going with 50 shares tomorrow, my goal is 20 cents. So 5 times 50 times 20 is $10. So the moment I make $10, I will protect that money and I will not increase my share size. I will come back again the next day. I'll make my $10 on 50 shares. Then doing that, I have made $20, and the so basically I left $10 in the drawdown. So the last $10, then I can increase my share size to 100 shares, and then I recover that, and I'll be green. Let's say $10 or $20 after the drawdown, and then from there I will be taking my one or two trades with the full position, which is 200 shares. Um, One thing I can clearly say to you is that if I'm taking more than 7 trades per day, it's a clear sign that I'm overtrading, because I never seen so any setups that are really good and clean and that are more than 7 so far. In my scenario, I think 5 is the hot market number of trades. 5, yeah, 5. 7 is a little bit higher, especially when my accuracy is sitting at 50%. I should lower down my I should lower down my number of trades. So my plan for these 2 weeks, Thursday I might not be trading because I have to go to my job early. So that day is gone. On the day of Friday, I'll be taking 1 trade or 2 trade max, and I'll come back on Monday. Again, I'll be trading 1 to 2 trades, and then on Tuesday I might go with 100 shares, 1 to 2 trades, and then from Thursday I'll be at my highs on my equity curve. So once I'll be at my highs, getting some cushion, and then I can go with the 200 share position. So the goal for me is right now is to improve my accuracy and to really take a quality setup. Can I grade this setup? What is the grade of this setup? I think it's a B or C. It's not definitely not A, even though it meets all the criteria of stock selection. But we still need to look at the chart pattern. So the criteria is it should be front side of the move. So is it front side of the move? The answer is no. So I'll write this down actually because that's what I'm looking for. I want rows all four pillars of stock selection except news, because sometimes you see stocks going up without news. So I'm just on the news. I'm very subjective, but it must meet all four pillars of stock selection. Then it must be hard to borrow, which it was, as you can see here, hard to borrow, right? It must be front side of the move, making new highs. Which it was not. So that's our answer, that's our learning lesson, which I am already aware. I just, kind of repeated the same mistake and I'm trying not to in the future. So here we are right now. Our month is going good. If I tell you how I'm doing in August, really good, right? So I had a huge loss today. This is my maximum loss on the month. 4 days in a month, it's more. And then I'm also thinking that for future, I will either, if I'm going to take 5 trades a day, then I'll use the raw strategy where I take 1/4 of my position till I make 20 cents on the day. So I'll go with 50 shares. My 200 shares is my full position. So I go with 50 shares and then I make 20 cents out of it. So that's $10. So once I have that $10 cushion on the day, on my third trade or a second trade, whenever I have it, I will increase the size to 100 shares and then I make 20 cents on that. So which brings me on the day to $10 to $30, and then I'll be opening up to my full position. So let's say on my last trade on my full position 200 shares, I lost 15 cents. 15 cents of 200 shares is $30. So which means I'll be break even on the day. So doing that helps to have less number of red days, and when they does happen, the red days will look much smaller on the day because you already had cushion on the day when you went out all out on the full position. So by the time I'm taking my 200 share position, I already had $30 of cushion. So even if I lose 20 cents, then I'm only at $10 on the day, which looks good. And so that's the one way I'm thinking. The second way I'm thinking is basically to not to trade 5 trades a day, just to limit my trades to only 2 trades per day, and then adjust my size according to where I am at my equity curve. So currently, if I am in the down in the drawdown, I adjust my size to 1/4 and just keep trading 1 to 2 trades a day till I make a new high again in my equity curve, and then going with the full position right away on a very first trade with 200 shares. But the criteria is only to take 1 to 2 trades per day. So I think I'm more inclined to taking only 1 to 2 trades per day in the future. So I'm not following the previous strategy where I'll be taking 5 trades per day. So for me, I think I'll more inclined towards this, taking 1 to 2 trades per day till I make $25,000. Uh, and on this one is basically what I'm thinking is, what if on a 200 share position I lost, let's say, $2? So assuming 200 share position, I lost $2 per share. My worst uh, that happened to me actually before, and this is something that I'm recovering from actually, which I already recovered by the way, but I can tell you what I mean here, right? So this is the month of July and this is August. So this was the day. So that's was with 100 shares. So 100 shares roughly giving $1.80, right? So I'm assuming that this day is also coming in the future somewhere. And if it does come in the future, that's like uh, $400, $400 on 200 shares. So assuming that I'll be down, I'll take it as a drawdown because I recovered from this drawdown actually, because as you can see I'm sitting green on these 2 months from July to August. And then but it took me a long time to come out of this drawdown, like these many green days in a row, and with this huge green day here, roughly $92, that helped me to come out. I've also seen that on these days I have mostly green streak of 5 days, but here I see one red day, when one green, one red day, one green, one red day, one green, one red day, one green. So I don't like this idea. So red, green, red, green, red, green, and red and green. So it tells basically, I think I might be overtrading in that way. So assuming if it's 200 shares down, $2 per share, so that's $400. So $400 will take me, and then assume that if I'm going with the 50 shares, right? Because if I'm drawdown, then I need to reduce my position. So that's where the problem is, because if I go down with 50 shares, assuming let's say that happened on the first of the month, right? I lost $400. So I'm down $400 on the first day of the month. And just right after that, I reduce my share size to one fourth of my position with these 50 shares. So it will take me the whole month with my one fourth of my position, making 15 this month, making 50 here, making 50 here, making 50 here, to recover the half of the loss. And once I recover, and then 2 weeks of the next month to recover two-thirds of the loss, and then from this point I can go with 100 shares. So it will take me roughly 1, 2, 3, 4, 5, 6 weeks, 1.5 month, to recover from that one single loss. The problem with me is not the recovery part, which I know I can do by reducing my share size, but the problem is with the DAS fees, because DAS charges me $130 each month. So let's say if I made $200, 50 here, 50 here, 50 here. So I made 150 and then $200, and I lost $400, right? So I'll be net negative $200 plus the DAS fee of $130. And if I do the same for the next month, so I made 50 here, 50 here, 100 here, 100 here. So that's 100 plus 50 50, and then 100 so that's 200 $300. So by this time I'll be out of my drawdown. I'll be out of that $400 loss. It Anytime a $2 per share loss on a full position, it will take me 2 months to come out of it. That's an interesting insight. That's an interesting insight, or maybe more, who knows. But for these 2 months I will still be paying $130 to DAS as well as my fees, uh, platform fees. So I'll be paying 130 here, 130 here, so that's 260, right? So rather paying the fees to DAS, what I can do is just increase my size from 50 shares to 100 shares and try to fasten the process. Uh, you know, going with half of my. But what if I lose more? What if actually cutting down to one fourth of the position is a strategy where you're saving yourself? Then it's a bad idea to go with with 100 shares. So that's all. I'm still trying to figure out that what I will do in a situation where I had $2 loss per share on a 200 share position, and then I'll call it a complete drawdown, and how will I come back out of it? So, and then with what share position should I go with? Half of my full position, or should I go with one fourth of my full position? But anyways, that day is still not here yet. When it comes, before that, I'll figure out how to approach that day, and also I'll place some hotkeys and hot buttons in a way that will stop me to uh, to have that kind of loss. And so I also made a rule that anytime if I'm taking trade above $9, I'll generally take it with 1/4 of my share position. So if my full position is 200 shares, I'll go with 50 shares anytime if a stock is above $9, because it's easy for a higher price stock to fall down by a $1 or $2 per share, right? And I need to manage my risk properly. So that's the rule for me, a very hard rule, and that will stop me, because a $50 loss on a $2 per share, 50 share position, $2 per share loss is $100, which is bearable, which is something that I can come out of with time easily, right? Doesn't impact my account. But if I go with 400 shares and then I had $2 per share loss, the drawdown is 2 months long, or maybe more, to come out of that drawdown, right? So that is something I made a rule, and then I made few other rules to make sure that how I can tackle that situation. And as you can see here, when I was down here, so basically I was down here, right? So this was on 23rd of July, and then today is 19th of August, so it took me almost a month of time to come out of this drawdown. And this is only when I was trading with my full position. So here I was trading with 100 shares, and here also I was trading with 100 shares, 100 shares, and 100 shares, or maybe 200 shares on this day. So from this day onwards, I'm now trading with 200 shares. So the reason I come out of this drawdown faster is because I did not change my share position. I just kept on trading with the same size that I used to before, because it was this drawdown happened because of one single trade, and I believe that as long as my accuracy and my profit to loss ratio is good, I'll just go with my full position, which is not a good idea. I don't recommend going with the full position after a big loss like this. What I generally prefer to is go with 1/4 of your position till you make half of this loss back, and then go with 2/3. Go with 1/4 of your position till you make 2/3 of this loss back, right? So you're slowing down, you're reflecting on things, and then once 1/3 is left of this loss, then you can increase your size to half of your full position, right? And then only after you make a new high in your equity curve, you are allowed to go with your full position. And also on that day when you're going with full position, you have either two conditions or strategies, especially for me. First strategy is where number of trades is 5 and I'm building the cushion on the day, and then I'm sizing up. That way I will have fewer red days in between, something that the Ross follows. Or the second, that's for the beginners, is not increasing the number of trades, because that will have impact on the accuracy. As you can see here, my accuracy last month was um, 52%, right? So one trade loss, um, you know put me right on the month, but other than that my accuracy was good every day, right? So how many trades I took every day? Two trades, one trade, one trade, two trade, two trade, two trade, three trade, right? And after these losses, I just spiraled on taking four trades, three trades, and seven trades, right? But how about this month then? So this month, what's my accuracy? 47%. So it is less than the previous month, right? So which means I'm inviting more losers. So thereby, uh, the previous month was working fine because I was making, the accuracy was good because my number of trades were less. and accuracy goes bad only in this area, here and here, right? So these days the accuracy is because as you can see here, I have 3 4 losses, right? So my plan is, as I recover from this loss and to make a new high, then I will be um, what I will do is basically this. I'll take 2 trades a day max. First trade I will take with $100, 100 shares, which is half of my share position. If it turns out to be a green trade, then I will increase my size to a full position, because then I will have at least some cushion on the day, right? But if it is a red day, a red, you know, then I'll keep my size as half of my share position. So the only time I increase my size to full position on a day is when I have a cushion. Now you ask me how much a cushion, because let's say on a first trade on 100 shares I only made $5, right? So that's not a big cushion, you know. So I'll put another condition. So if my first trade, and on my first trade I made more than $20, I'm happy to increase my size to 200 shares. Up to 200 shares, that doesn't mean I'll increase my size to 200 shares if I don't see any really good setup, right? But if my first trade I only made $10, I'll just keep my size to 100 shares. So I think that's a better strategy. So anyways, it become a long video at this point, but I think it helps anyone who is trading on how to tackle the drawdowns like this. Take even a single day as a drawdown, and then just just take action right away to slow yourself down before you do any bigger damage. What I don't want is to come back right here, right? So I'm still sitting at 227. I don't want to break below 200, right? And the only way to do so is if I'm going with a smaller share size, if I'm not increasing my share size. So currently I'm gonna recover this loss, $28, and then I'm honing down back to 1 to 2 trades per day with with a limit of only trading A quality setups. And then once I recover half of it or 2/3 of it, then I'll increase my shares from 50 to 100, and then from there I will then able to go further in the days and then only take 1 to 2 trades. So what's the strategy ahead? So for the remaining month of August, the strategy is simple. It's this now. Maximum number of trades I can take from after this day onwards is 2. I'll not increase my number of trades. So that's what I'm saying. That's what I always do. But sometimes I just increase my number of trades because I see good setups. But here, no, these are definitely. But my accuracy is fine, like 53%, right? So 53%, and that is the end of the trading session where I made money, right? $2 loss, $11 profit, $20 profit, $32, or maybe the luck is helping me out, you know. So that's all from this video, and today is 19th of August. I might not be trading tomorrow. I'll be coming back maybe in on Friday, and then from Friday I'll be trading for the rest of the week, uh, next week as well. And then so stay tuned. You can subscribe and like my channel so that you can see my future videos and how I'm day trading. So basically this is your small cap momentum day trading. So anyone interested can subscribe, and happy to see you in the next video. Thank you. Bye.